let's start with a pulse check. How are you feeling? What's your feeling towards the global economy in general?
I am actually feeling very good, not because the global market is very strong and everything. It's just I'm doing something exciting myself. I'm no longer running the market and the way that I has been running Hong Kong Exchange. So I have to be really, have my hands on the pulse of the market every day. And I look at volume, I look at up and downs of the index, and I look at, how the various market interact. I no longer do that. So I'm sort of detached from the day to day. Also, I'm not an investor, into the current market. So I don't feel that, that connected as much, but I do strong sense it's very difficult to escape the contagion of pessimism that seems to be prevailing everywhere in the market. And this is really not the best time. And whether or not this is the worst time, depending on who you will be asking. But I don't really think there is any real particularly consistent bright spot. Seems to be that everybody has their own issues. It's not like a one market you can now go there and hide there and then wait for the other markets to correct and recover. Everywhere you go, there seems to be structural issues, whether that's in North America, in Europe, in Asia, in China, in Hong Kong. So I know it's very hard to be optimistic these days, but I do think investors sometimes tend to react excessively to what's going on today. And also, my sense is that people generally our feelings about the market tend to be very binary. We don't have complex feelings. We either have greed or we have fear. So today, the fear is taking the driving seat, and then the greed is taking a back seat. But the problem is, as soon as something goes right, and then when the greed button get pushed, and then we are back into crazy market again. So I just hope and wish that our feelings toward the market can be a little bit more nuanced, so that we don't have to be as pessimistic today as right now we seems to be feeling.
So everybody knows that you are an expert in China. And in light of the economic and political uncertainty, how do you explain the opportunities of China to all the skeptics?
Well, I don't think anybody can be convinced. I don't think anybody, no matter how persuasive you are, it is very difficult to change people's mind, particularly when people just have some fresh losses of their money in the market, and it is time to lick the wounds, and it's not the time for them to think otherwise. I don't really think there is anything that people can say about China that is going to solve people's short-term memories of the pains that has just been incurred onto the market in the last year and two. But China is becoming so big, and the society has become so complex. The economic structure is so intertwined, both internally and with the rest of the world. I don't really think, no matter how pessimistic you are about China, I don't think anybody can, as long as you wanted to invest in the market, I don't think anybody can somehow write it off. People today, clearly, many people seems to be saying, okay, don't talk to me about China. And, but I'm sure as soon as, some money get made and the people, the greed button, start to show up, we're going to be back in business again, because, we've been there many times, the up and downs. This time, everybody think somehow is different. In my mind, is not. I don't really think there are structure development of China that is very difficult to reverse. But the priorities of the government is different. And their willingness to accept market impact, or their willingness to tolerate the pain that the market brings about seems to be quite strong. So as a result, there is a puzzlement as to why you're doing this. We're all already suffering so much. We're supposed to be your friends. How come this is happening this way? I think there are different priorities, at least politically, short term, that's just going to take precedent over what might otherwise be long-term policies, which I'm sure is going to find its ways to swing back to some level of normalcy. But I think we need to let this, move swing to its natural point of limitations, and then I'm sure it's going to come back. Well, I can only just stay in their generalities. I know I'm not particularly helpful. I'm a fundamental believer that we are already where we are in China. That is very, very difficult to imagine that somehow we're going to be back to the past.
So you and I are now living in Hong Kong, and I strongly believe that Hong Kong is a great middleman to facilitate the dialogue between the East and the West. And to my knowledge, I think the government is going to relax the quarantine very soon. So now, as we are both living here, what about your near-term outlook in this city? Do you think we still have a role to play in the eyes of Beijing? And do you think we can still maintain ourselves as the international financial center?
I never ever had any doubt about the resilience and about the the long-term sustainable role that Hong Kong has played and will continue to play. We're very close to China. Closer in a lot of ways now, which means that we're not going to be immune from the volatilities that are coming from that. But I generally look at Hong Kong not necessarily, by framing what does China think, what does Beijing think, are we still useful to them, as if we are a piece of the chess play that is going to be played by others. I actually think we pretty much are, the way we are just useful for everybody. We're just relevant for everybody, and we are indispensable for everybody. And I don't think there is a policy or decision somewhere in Beijing that is going to say, okay, let's switch on Hong Kong, let's switch off Hong Kong. I think, we either switch on or switch off largely by ourselves. And, this is really, as long as China is not going to be completely closed up, even if they close up, in many ways, that Hong Kong's relative importance to China is going to be even bigger. Like in the first part of the New People's Republic, the first 30 years, Hong Kong arguably from a relative perspective is so much more important to China than anybody would have thought about it. But then obviously when China completely opened up, then we play a very, very different role, but a much more active role, and we take much greater benefit. The one thing is very simple. As long as we remain a common law market, as long as we remain a capitalist market economy, as long as we remain, largely an open society, we're always going to be here. But in many ways, but just looking at the behavior of ordinary Chinese, successful Chinese people, most of the successful Chinese people, when they achieved certain economic and other successes, you wanted to find a different place to place your money, a different place to place your life, your family. and other priorities of life a little bit outside China as a way to diversify. And so Chinese will always want to find some ways to leave China, but when they do leave China, they never really want to leave China. They want to be in the international market, but all they really know is how to operate in the Chinese market. So they would like to have their operational base or their personal life focus or base out of China, but very few want to travel very, very far. So therefore, we will always be that offshore Chinese destination, a destination of Chinese capital, and we will always be the starting point of international capital wanting to access into China, and also most of the Chinese, if you look at it, when they leave China, 95% stayed in Hong Kong, and maybe a few percentage go to Singapore when, for whatever reason, they don't feel as secure and as comfortable in Hong Kong, and they move on a little bit. And other people move far away, but most of the people, when you have a lot of wealth, a lot of money, you buy a couple of apartments in Australia, in London, in New York, then what are you going to do there? So they still all preoccupy and occupy themselves with still everything inside China, because that's really the market they know the most. That's the market they feel the most comfortable, and that's where most of the social and family connectivities are anyway. So I'm not personally worried at all. But this COVID issue challenge that, we're trying to somehow fit in the middle. We want to get both, but for a long time, we ended up getting neither. That's not a situation that we wanted to be in. I'm glad we are solidly on the road of opening up. And even if that means only one way open with West, and I think we already, the train already left, the bus already left, that we're going to do that. Even if that means that we may not be able to open with the mainland yet. And I don't really think there is any hesitation to complete that journey. So we're going to be there pretty soon.
Well, you just mentioned Singapore earlier, and next week you and I are flying off to Singapore. A lot of people have been saying that Singapore's taking our place. What's your take on that?
I don't think, I have that mentality. When you see they take something from us, take ours. What is ours? What is that? Money. The whole idea of Hong Kong is everything is free here. Money is free. Ideas are free, expressions are free, and people's movements are free. So we have no entitlement to say this is Hong Kong, Singapore, stay off. You can't take it. If people, the entire idea of Hong Kong, people like Hong Kong, people like Singapore, is precisely that whenever people wanted to go to Hong Kong, they come to Hong Kong. Whenever they want to go to Singapore, they come to Singapore. The moment we started really trying to put a restriction around it, then that's a guarantee that your market is not going to be the destination of capital. So at any given moment, there are reasons for a lot of people to be in Singapore, and that I'm sure, are going to move, some level of capital there. Without a lot of the activities and policy changes in China and in Hong Kong over the last couple of years, maybe some may not end up there. But our market, something is going to happen sometime, or if not today, maybe tomorrow. So when that happens, there's going to be an impulse for certain things and certain people and certain money to say, okay, I'm going to find an alternative home for a while. And as soon as everything settles, they either move that back or people just no longer are going. And this is a very natural thing. And, I don't really think, because everybody else have been looking at Hong Kong with so much jealous, we're just not aware of. And as soon as somebody else have a little bit greater party and more people going to their party, we start to get jealous. I don't really think that's very healthy. And I don't think of that at all.
Charles, you know why people are jealous? Because of what you have done for Hong Kong. So on behalf of Hong Kong, I want to thank you for serving at the stock exchange as the CEO and coming up with the Stock Connect, Bond Connect schemes. I think that's why people are jealous. Now, tell me about, your days at the exchange, how you came up with that idea to really change the dynamic of Hong Kong over the past 10 to 15 years. You want to share a little bit how that idea came about and where do you see this going forward?
Thank you. That's very kind of you, Ronald. I think when you run the market, you see how capital flows back and forth, and between the free markets, between the Western market, and you look at the history. I think the idea of because the opening of the market is something that we all know China wanted to do. The world wanted to happen, want that to succeed. But the whole idea is to reconcile two seemingly impossible goals. One, that if you open a market, then the two markets need to be completely open and completely free. Otherwise, it's not really opening. Any artificiality of building a pipe that only approved people can do, all the old way of thinking, that's not opening of the market. That's just artificial connectivity of the market. You want it market to open, you need both sides to feel completely free. So that's one goal. So everybody say, when we open, we have to make sure that's really market-driven open. But that inherently runs into a conflict with another strategic and policy goal of China. That is, China is not ready yet to allow its currency to be freely convertible and allow renminbi exchange rate to be freely exchangeable. And the capital control still needs to be in place because there are greater goods to be served, or there are greater, a yield that could be brought about if that is prematurely, broken down. So how do you really, because most people look at this and just saying, okay, that's impossible. So you either get A or get B, you can't get both. So I think being willing to ask the question, why not? Why not trying to find a way to see whether we can make the two work? And so the key there is to think things compartmentalizing your thinking. And rather than just get these two impossible goals to be both in front of you, you start to really break it down to say, what are the things that is the most important thing about being free and open in the market? It's really pricing. It's really about trading. We cannot allow price discovery to be in separate pools of capital. Then the price discovery is different, the demand and supply is different. Then you're not going to really have a market that is completely, meeting demand. So clearly, being free and being open is important for a market. Is for trading, is for price discovery. And then for capital control, is more about actual physical movement of money. They don't want too much money to be moved. So if you have these two things broken down, then you start to feel maybe since trading is already electronic, so why don't we just put trading electronically altogether into one matching machine, an engine? So international investor wanting to trade A-shares, they should be able to trade directly on a screen in Hong Kong and directly connected to the market, so that pricing-wise, all the buys and sell order get all piped into Shanghai for the Shanghai market and piped to Shenzhen the Shenzhen market. And all the Chinese investors, when they want to trade Hong Kong shares, all the electronic order are piped into one matching engine, so that price discovery is completely open and free. And because that's the only thing that people really care, is that I want to trade so that I can lock down that profit or avoid that particular loss. That really has very little to do with physical settlement of money. And then you could say, then let's make sure that we settle and clear this in a way that does not involve every single trade going through the border back and forth. So therefore, we are able to provide a way only for the net flow to come across the border and have most of the settlement and clear and net it out in the home market first, so that all the buy and sell is net. Then only the net get actually go through the border, so that you can explain to the regulators and policymakers in China that you have achieved price parity, but you actually didn't really have to accept and live with the negative consequences, or at least the perceived negative consequences of massive cash flow back and forth. So if you look at Connect over the last 7 years now, I think the last number I checked is 70 trillion, trading have taken place, and only a few trillion market positions get created respectively by each other. Only literally just a few hundred billion renminbi, change, kind of a net northbound outflow or net southbound outflow. So that truly allow a massive trading. So for every $100 trading, and it's about $10 market cap get created, only $1 actually moves across the border. So that's sort of a leverage and creativity by breaking things down really allowed us to find a way to do what the market wanted and needed, but to do something that is also not in conflict and bridge the policy goals of the Chinese regulators and policymakers.